Morning. This is Arnie Waters here at Waters Capital in Boston. I hope you don't just look at my videos. I hope you look at the thoughtful presentations by our portfolio management department that run to 10 to 12 pages every day. If you look at what we're thinking in detail, it may help inform your investment strategy. Now, as I look out at the world today, what I see is gold up at 1421. In line with our projections. Now that we've suggested you pile back into gold, we see gold in the immediate future heading toward $1,500 to $1,700 an ounce, looking for at 25 to 2,700 over the next 12 months. You know our views, and if you don't, please look back at our history to see where we have stood on the issue of difficulties in the world economy. Now, these things are kind of obvious, but one of our huge profit centers has been the rare earths. We particularly support Molycorp. But what is going on in rare earths due to Chinese reactionary policy of refusing to do and seriously limiting exports is everybody else in the world, aside from including the United States, are trying to get rare earths. Germany has made some deals. Russia looks like it's going to be allowing Mitsui and Sumitomo to exploit, by that I mean develop, some rare earth element sites in Siberia. East India has begun to develop its own rare earth sites and is indeed exporting things to Japan. And so we also will see that the South Koreans have gotten deeply involved and are trying to learn what's available in Africa and other parts of the world, because everybody's very concerned about rare earths. So we see rare earths as a huge profit area. We see Molycorp trading at $80 to $100. That's an increase in our projection, $80 to $100 by Thanksgiving. So if you don't own Molycorp and if you don't own some gold, you're really doing your portfolio a disservice. Now, I hope that you're starting to realize that there's two different kinds of stock markets. There's a stock market that's available to regular people like us, and there's a stock market that's available to hedge funds and gigantic institutional investors. So you can't beat the giant institutional investors. At least that's our view. So we encourage you, if you're going to buy stocks, to kind of passively index, buy a passive indexing fund. Because it's very difficult. We keep asking our clients, we keep asking them in their other investments, are you making any money? The answer is no. Now, don't be confused about what's going on in the last 30 days or so in the U.S. stock market. With what everyone knows about the world economy, we are simply the prettiest horse in the glue factory. That's not my line. I copied it from somebody else. Everybody else is really stinky, and so if you look at worldwide equities, a place where you might actually be able to make money in an area where trading and transparency is pretty common, trading and transparency, and some kinds of rules about behavior are in place, the U.S. stands out. But that doesn't mean the situation is great all around the world. On the contrary, it means in the rest of the world, things are pretty messy. So don't be confused about whether you're making money in the U.S. stock market. It's still the prettiest horse in the glue factory. Aim for the ice flows, not the open water. Keep swinging.